Hey folks, Dan Frio here with your closing bell for June 24th, 2025. So we saw mortgage rates retreat just a little bit continuation today as we saw over the last 3 or 4 trading sessions. But the news out today was really good. So we had economic news that came in good. We also had the Middle East. There was a ceasefire or hopefully a resolution with Israel and Iran. That's causing oil prices to plummet, and that's causing the equity markets to rally that we're seeing right through here. So we got the Dow Jones, basically all the indices across the board are up over 1%. That's amazing. We have the VIX down 11% to 17. We haven't been to that number in a while, so we like the teens. That means the blood pressure on Wall Street is actually lapsing at this time. We also had a robust day in the bond market. Look at MBS's. This is the mortgage bond that's trading. It's up 30 ticks today. I thought we'd see mortgage rates ease a little bit more than then, but the rally's going on. So here's what we saw, the 2-day rally. Look at this. We saw yesterday it went up and then come back down a little bit, and then we continue. Look at this 5-day. So we're not going to fight this chart, folks. This rally is continuing, and if you locked in your rate down here, you might be able to do better, and I'll give you my information at the end of this video because I'm actually a federally licensed mortgage loan officer, so I'm licensed in all 50 states as well as Puerto Rico, and I have a slogan, one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? I'll give you that information at the end of this video. You're here for these things. So what I want to bring up right now, though, is we're going to get to the economic calendar and some other things here in a minute, but I want to show you a caption right through here. Maybe what's needed in D.C. is the Congress people or our representatives to take an economics lesson. Because I watched a lot of the Federal Chairman Powell's testimony this morning, and this one stood out to me, and I was sitting here scratching my head because half of what this young lady was asking, I guess, wasn't really a question. It was just comments. She was trying to get some blips in there, so maybe she can get some media blips. And I want to show you or have you watch this video. I'm going to pause it, because you might have the same questions that she has or the same concerns. So what I'm going to try to do in this video is either try to debunk what she's saying or try to give you at least the context of how it should be taken. So let's get over to this. Then when we come back, I'm going to show you how the markets ended for the day. I'm also going to show you the economic calendar that's coming out the rest of this week that might be affecting mortgage rates as well. But first, I want you to understand the economics between housing, the economy, interest rates, and basically how it all works. And this young lady doesn't seem to get it. So let's get over to this interview that we have with Federal Chairman Powell getting asked questions by Congress.
Thank you so much, Mr. Chairman. Chair Powell, last month there was research published in the Journal of Urban Health that found that more than half of Black women of reproductive age, the term they use, in the counties that I represent, that had experienced some sort of eviction during their lifetime. So that's like 50% of Black women in the two largest county, Wayne County and Oakland County in Michigan. And these numbers are horrific. As you know, were you aware of that?
No, I was not.
And you know, evictions are often very traumatic experience, but also it creates a cycle of poverty, but also this instability for many families. But especially when it comes to a lot of our Black neighbors, the access to equity, the access to housing has diminished even more. In Michigan, we lost more Black home ownership than any other state in the country during the last recession.
Okay, so I hate doing this, but I got to fact check some of these things. So what I did is I went in here and I put top 5 states by foreclosure severity among Black homeowners. And Michigan wasn't number 1. California, that's what I thought was going to be number 1. California was number 1 by far. It's huge. And then Florida was second. And then, yes, Michigan was up there. But I don't understand a lot of what she's saying. So we'll go back to it. But so far, we debunked number 1 that she's put out there. So this isn't supposed to be an insult to anybody out there. I just want you to understand and watch this video. You probably understand economics more than this young lady. And hopefully you do. If you don't, please subscribe down over there because I'm going to teach you how all this stuff works. So let's get back to the video.
So we know the housing crisis, I believe, is structural. And some may say it's a policy choice. While there are many factors at play, and you know this, Chairman,
home prices are structural. I don't get that. It's basically supply and demand. It's just like anything else. If you want to buy soda, supply, demand. You want to buy anything, it's all based on supply and demand. And that's how economics works. So let's continue.
mortgage rates, the finance rates, and so forth, that drag the supply of new housing. But last month, new housing hit a 5-year low. Are you familiar with that?
New housing hit a 5-year low. I don't think any houses got destroyed, so I'm not sure how housing hit a 5-year low. Maybe housing transactions or housing something, but you just can't say housing hit a low because there hasn't been houses depleted that I know of.
Not sure exactly what statistic you are referring to.
Okay, I don't know. There was all this articles about the housing market and the impact of tariffs and so forth, and they said again it hit a 5-year low. And again, I'm getting this from a source, but this sets the market up for higher inflation and more burdensome housing costs to years to come. So, Chairman Powell, I'm looking at this monetary whatever policy framework that you guys have.
How do you even like her actions with this? Whatever that thing is you control. These were some data points that somebody gave me. Maybe you should have done some research before you went and took up the Federal Reserve chairman's time to just get maybe some video clips that you can put out on the web. But let's keep going.
Put together. Do you think that the way it's structured, and again, I'm trying to understand how you're looking at this in the housing crisis, do you believe it's eroding new rental supply under construction right now, leading to high inflation in future years?
So I think there are two things going on quickly. One is just there's a longer run shortage of housing in the United States, which there's nothing that the Fed can do about. That's not something we can affect.
Well,
there's also, if I may say, in the short run, rates are high, and that's going to weigh on housing activity. But the best thing we can do for the housing market, the absolute best thing, is to restore price stability so that rates come down and so that rates can be at a level.
But don't you think that the restrictive monetary policy the framework you all put together undermines long-term price stability right now by reducing the supply?
No, I mean, I think
You're
it
reducing
restores price stability. The point of higher rates is to...
So you don't think the higher rates is impacting future supply of housing?
So I think what that does is, I think interest-sensitive sectors like housing are very much directly affected when we cut rates or when we raise rates. That's right. But that's part of the mechanism for restoring general price stability.
So keeping the high interest rates does not impact future supply of housing?
Does not, over the
I need to go back to talk to
over the long
women
run,
that the study
will not be, our policy will not be a driver of longer run housing supply in the United States.
Let me ask you, what is the difference? And honestly, confused. I want to learn here. And I'm sure people listening to this want to learn. What is the difference between demand-driven rent inflation and supply-driven rent inflation? Like you guys use these terminology. What is that? How do I communicate that to the public? What is the difference between supply-driven versus demand-driven rent?
Those are not terms that we use particularly often.
What's supply-driven formula?
That would mean that there's not enough supply to meet demand, but at the same time, it also means there's more demand than there is supply.
So, are you guys ignoring that?
No, but as I said again, our policies will not affect in the long run. Either demand or supply in housing.
I'm being serious, y'all. We're talking about a housing crisis that is getting worse right now because we're not paying attention to future instability that the current rates, and you can raise your eyebrows and all this stuff behind. I don't know. I mean, do you understand? Like, I come from a community right now that I believe is now being impacted by the current framework that you're putting together, that I do feel like it's going to be long-term effects on the housing crisis, and you're ignoring it.
No, we're not. Actually, we think the very best thing we can do is to fully restore price stability at the aggregate level. That will be the best thing for homeowners and for home builders and everybody else. In the long run, that is the single thing that Congress is inclined us to do.
Did you see where I'm coming from? It is impacting future supply of housing, right?
Not in the long run, no.
Okay.
Gentlewoman's time has expired.
So let's just figure this out. Supply and demand is based on, that's how everything works. That's how you get a price of something. So if there's more supply of something, like we saw during the recession, what did we have during the recession? The Great Recession we just came through, or COVID. We had so many people that had excess money out there, and it was caused the inflation bubble. So if you go to disposable income, if you go to the disposable income chart, and this is going to actually tell you exactly where those numbers are. If you look through here, you're going to see disposable income. Here's where inflation hit us. So if you go through here, this is over time, since 1960 through here, here's where we saw the savings rate. Okay, but if you break it down during this section of time, this is during COVID. This is how much extra money people have. Well, they had all this extra money and they depleted it all by buying big houses and things like that and overspending a lot of these things. And we also had a supply chain issue that pushed up prices as well. So you can't blame housing shortages on inflation, and you can't blame higher interest rates for the housing effects, because I hate to say it, it just doesn't make much sense. Okay, so because housing is based on, the supply and demand, and the interest rates, especially mortgage rates, are tied to a mortgage bond. So I agree with her as you drive down the short end of the yield curve that the Federal Reserve has somewhat control over. You might drive down the long-term effects, but she didn't mention anything about the bond market, anything about our deficits, and anything about uncertainty throughout the world. All she was focusing on is women in her community that are having a tough time, and I get it. But you can't extrapolate that all over the country. And when you come to the meeting and you meet Federal Chairman Powell, I hope next time you're a little more prepared. That's all I got to say to this young lady. So let's get over to the rest of this content that we have. So here's what we have coming in today on the economic news. We had right through here, the S&P Schiller Index, home prices. Well, she says home prices are getting killed. Well, home prices are still going up. So if you look at the nation, we look at the Case-Shiller Index. Home prices at the last reading were up 4.1%. Supposed to go up 4%. It didn't go up that much. It went up 3.4%, but we're still in an aggregate increase across the country. Okay. If you look at it month over month, last reading was up 1.1. It was only up 0.8 this time. Okay, that's still a good reading, not showing a crash in the markets. Then you had consumer confidence. We'll say that's crashing because of all the uncertainties with everything out there. But so far, this is the data that we have in today, and nothing out there is really causing huge concern in the markets. Now, what we're going to get the rest of this week, we're going to get durable goods orders, we're going to get the PCE, and we're going to get the GDP to see how robust the economy is still going. We're also going to get some initial jobless claims coming out on Thursday. So we're going to focus in on those, and that's going to give us the basically the strength or the weakness of the economy. That's what the bond market represents, and that's what you're seeing right through here. So when you're really focusing in on mortgage rates, we don't look at the Fed. We look at right through here. We look at the bond market, and hopefully this could be your bond class for the day. So when we focus in on mortgage rates, we look at this right through here. This is an MBS. This is a mortgage-backed security bond that trades on Wall Street. You might have this in your portfolio. As this bond goes up in price, rates come down. And this is a function of the markets. It doesn't have anything to do specifically with the Fed, but the Fed, is in the background. But the young lady's interview I had to bring it up to you guys because if she's that confused, hopefully she's that confused and wants to learn, but if she's that confused, how's the average person out there supposed to understand real estate, economics, finances, and how the Fed, or what the Fed actually does? So that's why I do my reports on a daily basis. So that's what we're seeing so far today. If we're going to look over what the Federal Reserve's planning to do in the future, well, here's what it looks like. At the meeting in September, that might be the time that they cut because there's still an 80% chance that they're not going to cut at the next meeting in July. So maybe we'll have a rate cut in September. That's all going to be prevalent to what this data comes in. What's the job market's going to look like? What's the economy looking like? GDP looking like? And what's the unrest in the world also looking like? Because all of that plays a role in these things over here. So that's my report for today. So getting back to me. My name is Dan Frio. I do this report actually twice a day to inform you guys what in the world is going on with these things over here. And we have a slogan here: one application, one credit pool. We're going to shop your loan to over 30 different lenders. Now, how does that work? So, folks, I work at a federal bank. So I'm actually a federally licensed mortgage loan officer. So I'm licensed in all 50 states as well as Puerto Rico. The unique thing about our bank here is we're set up with 32 other lenders. So that gives you the option when you put in your application through here, we're going to get you quotes from our bank, and 32 other banks. We can offer you their programs, their rates, and even programs like we have a 1% down program that we're offering right now with one of our lenders. So if you're looking to buy a home right now, check and see if you qualify for this program. It gives you up to $7,000 for down payment assistance. Use any which way you want. We also have our podcast on here on a daily basis, other videos. But if you're out there monitoring mortgage rates looking for a chance to refinance at a lower rate, go up to here. I'm going to show you a little tool we just added in here. Click the refinance button. Here's what it's going to offer you. It's going to show our rate watch. Let's get it set up. So what this does is if you're a homeowner now and you're focused in on, okay, when rates hit, I'm at 8% now. So when rates hit 6.5%, I want to refinance. Well, instead of you monitoring it, why don't you put that in my lap? So what you're going to do is go in here. You can watch this video to show you exactly how it works, but just give me some brief information about your current home, your current mortgage, and the rate that you want to refinance at. So when that rate hits, we'll get you locked in. We'll get your paperwork started, and you won't miss it this time. So thanks for watching, folks. My name is Dan Frio. If you want to learn more about me and my team, just go to therateupdate.com. You can give us a call. You can schedule appointments with us. You can do all kind of stuff on this website. So I hope you enjoy it. But if you're out there looking to buy or refinance, hope you reach out to us and at least get a quote so we can help you out and make sure you're getting at least quotes from 30 different companies. So thanks for watching. God bless. Have a fantastic evening. I'll see you back here tomorrow with the opening bell to see how this mess starts another day. Thanks for watching, folks. See you then. Bye-bye.